Hey guys, welcome back to another episode of the show. Thanks for tuning in with me today. Today's topic I want to jump right into because I think this is something that's going to apply to everyone, regardless where you are in your wealth building journey. If you are not yet a millionaire, this strategy can definitely get you there. And if you already are, this strategy could help you layer on another million before you go to retire. So today we're talking all about it and why the triple tax benefit of a health savings account can really be beneficial for you and a way to get you to millionaire status. So what are they? How do you leverage them? And why are they so valuable? Well, we're going to break it all down. Just imagine that you can contribute into something that is tax deductible, will grow tax-free, and you can take it out without paying taxes. Kind of sounds like a financial unicorn, doesn't it? That's because it practically is. HSA offers a triple tax advantage that is really unparalleled to other tools in the financial world. So let's start with the very basics. They are packaged as a tax advantage medical savings account. So we automatically think that this is just where we put our money in order to pay for out-of-pocket expenses that your insurance isn't covering. And that's absolutely true. That's where the concept came from, but it's really far more than that. And that's what I think most people are missing out on. The reason that the HSA is so enticing is because you get to make those tax-free contributions. So contributions to your health savings account are made with pre-tax dollars, which will reduce your overall taxable income for the year, which results in you paying less tax. For example, in 2025, the contribution limits are $4,300 for individuals and $8,550 for families. And those of you that are over 55, you also get a catch-up contribution of $1,000. So number one, you get the tax-free contributions. That's big. Step two, you get the tax-free growth. So the funds inside of the health savings account grows tax-free. Whether that's through interest or investment gains, you will not owe tax on the growth of that money. So if you invest a total of $200,000 and it grows to be over $1 million before you withdraw anything, you are not being taxed on that spread of the growth. And as if those two things aren't enough, you get the tax-free withdrawals. Huge. So whether you're withdrawing money for medical expenses or you're using this as a retirement vehicle down the road, that money that you take out is tax-free. That's why we call this the triple tax threat. Oftentimes people think that health savings accounts are only for medical expenses, but we know that it's for a long-term wealth strategy. It gives you an additional opportunity to invest in. Many HSA providers will offer different type of investment options similar to those in a retirement account, such as mutual funds or ETFs, which will ultimately grow your wealth and your money over time. The other thing that it does is it gives you a cushion for healthcare in retirement. We know that healthcare costs often escalate as we age, and by allowing your health savings account to grow over time, you can create this almost dedicated fund to cover future expenses, which will alleviate any financial stress during retirement. And lastly, after the age of 65, you can even withdraw money from this account for non-medical expenses, meaning just ordinary income or whatever you want to use it for. You can use this money and not pay penalties similar to a traditional Roth IRA. So this flexibility allows your HSA to function literally as another retirement vehicle. And regardless of how much money you make, what you earn, or what your total net worth is, this is something that everyone can utilize now and leverage the triple tax threat. And if you haven't done so yet, how do you do it? Well, step one is the most important part. You have to enroll in a high deductible healthcare plan, an HDHP, to qualify for an HSA. A lot of letters, right? But basically, the bare bones is we need to make sure that we have the right plan, a high deductible healthcare plan, in order to have the HSA. And how do you do that? Well, obviously, if you have an employer, you want to look through the different options that your employer offers and see if they have a high deductible healthcare plan that is HSA eligible. And if you don't have an employer and you're self-employed or a business owner, you can go to healthcare.gov and look at the marketplace to see what options are available to you. You can even work with your healthcare broker and look at plans that are specifically labeled as HSA eligible that has the high deductibles that meet the IRS requirements. Now, if you have a healthcare plan for your business and your employees, there are those private options, Blue Cross Blue Shield, United, Aetna, as just an example. You'll just want to make sure that the plan qualifies as an HSA eligible under the IRS rules. And if you're over 65 and you're on Medicare, you cannot contribute to an HSA. However, some people will actually delay their Medicare enrollment and stick with their employer's high deductible health care plan in order to benefit from the HSA. Now, a lot of details there, and I don't want you to get caught into the weeds. I just want to make sure that you know that if you have a high deductible healthcare plan, there are options. And sometimes when you look at it, you can actually lower the cost of your overall healthcare while being able to leverage the benefits in an HSA. But just remember, not all high deductible plans qualify. Make sure that you confirm this if you want to take advantage of it. The minimum deductible for 2025 to qualify for these plans are $1,650 for individuals and $3,300 for a family. So you can even check what you have right now to see if maybe it qualifies before thinking that you need to change your healthcare plan. Sometimes the most challenging part of anything is when we get caught up in the details and then we just don't get started. So I don't want that to happen to you. The most important thing is opening an HSA is really the first step to becoming an HSA millionaire, and it's really straightforward. So I just want to recap it in 4 simple steps, and then I'm going to share with you the most important part that you don't want to miss. Okay, number 1, make sure that you're enrolled in the high deductible healthcare plan that qualifies for an HSA. Step 1. Step 2, make sure that you maximize the contributions to the allowable limit for that year. Whatever the maximum allowable limit will be, sometimes it changes year to year, likely. Make sure that you invest that much and max it out every single year. Step 3, once you've invested those funds, take a look and see how you want to leverage them. What do you want to invest in? Can you diversify it from what your other retirement or investment vehicles are? Do you need more ETFs? Do you want some mutual funds? Do you want to invest in crypto? You have the choice where to invest that money. And step 4, remember that it will take time to become an HSA millionaire. But remember, we're playing the long game. Even with just an 8% return, if you invest about $250,000 in total contributions, you'll become an HSA millionaire. If you get that to be a 10% return, you're going to reduce it by 4 years. So even with a healthy stock market return, it's going to take some time, but that's where consistency and playing the long game will win. And there's one huge point I don't want you to miss. This is one red flag. Do not pass go. Do not collect $200 until you hear this one thing. If you are using this HSA in order to offset medical expenses throughout the year, this won't work. More often than not, the mistake people make is using their HSA now, rating it every single time they have a medical expense or a healthcare expense. Now, granted, that's what it's for. So if you're in a financial position that you need to save that money and use it for that, then use it. However, if you really want to leverage this and you want to take advantage of the triple tax benefits and become a millionaire or get another $1 million in tax-free growth, tax-free contributions, and tax-free withdrawals, well, you don't want to raid the health savings account. You want to keep that money in there. You want it to continually grow and compound interest. So when you're older, it's going to be there so that when healthcare gets to be a little more expensive and you're going to need the money the most, you will have a nest egg built. And that is my hope for you and everyone watching or listening. I hope that you stay healthy, stay happy, and that you can retire young, and that this is just another source of tax-free investment income for you to travel the world or have fun with your family, whatever it is that you want to do. But the bottom line is this. An HSA presents a unique opportunity to manage your healthcare costs while simultaneously building wealth through this triple tax strategy. And by utilizing it, you can enhance your financial well-being and potentially set the foundation for millionaire status if you aren't yet. But as always, the key lies in understanding the rules, maximizing the contributions, making informed decisions that will go along with those goals, and just getting started. In investing, we always say, the best time was to start yesterday, but the second best time to start is right now. So if you're working with a tax strategist, you can also ask them for more information on this. Accountants, CPAs, tax pros should be able to help you. And if you're not working with someone that understands this or can help you leverage it, then you can go to candyvalentino.com, get a referral from us, and work with one of our tax pros. Okay, guys, thanks for tuning in and spending this time with me today. We'll see you next time. All right, guys, if you found value in today's episode, please leave us a review, subscribe to the show on YouTube, Apple, or wherever you tune in. Thanks again for spending this time with me today. We'll see you next time.